Ticker symbol CMG has returned over 75% in the past year. And today we'll be looking at a company which is as high quality as any company in the stock market can be, and why TipRanks actually rates this company an 8, outperform based on moderate by analyst consensus, but a small decrease in hedge fund activity and a small amount of shares in insider transactions. So today we'll be looking at Chipotle Mexican Grill, a fast food company. In their annual report, they say that their activities consist of owning and operating Chipotle Mexican Grill restaurants, which feature a menu of burritos, quesadillas, tacos, and salads. I'm sure if you're an American, you've known this company, and there is a high chance that you've eaten here before. And well, if you're not an American like me, there's another big chance you know this company. Well, as of December 31st, 2023, they owned and operate over 3,400 restaurants, with 3,371 in the US and 66 outside of the US internationally. I've seen these in London, in Paris, all over the world. And they outline a growth strategy which we can divide it into 4 different points. The first one being to increase the revenue of each individual restaurant by delivering exceptional in-restaurant and digital experiences. So basically, by making your clients happier, you will ensure that they are recurrent and will buy more from your store. The second one is to enhance the brand awareness and to improve customer retention, which goes hand in hand with the first one. Third one is to amplify technology and innovation to drive growth and productivity. And this one is an insanely underrated lever because a lot of companies say this just to put it into their annual report and then attract more buyer attention, such as companies that put, we use AI just because it's very hyped right now and they want to get more buyers into their stock. However, Chipotle is actually building upon this point, as last year they actually started testing how the burritos and their menu could be produced automatically by robots instead of having workers at the stores. You could save a lot of labor cost while ensuring quality standards and ensuring the efficiency of the whole process. So this could be a game changer for Chipotle, and I believe that it is one of the main drivers of that 75% stock growth in the past year. And the fourth and final lever is to accelerate new restaurant openings in the US and internationally. This company shines when we look at its financial analysis. So first of all, they have a very good return on capital employed of 18% with an extremely solid interest coverage ratio of 200 times, meaning that they won't have to worry about debt in the short term. They have a great cash conversion of 109%, profit margins of 23%, and operating margin of 17% accordingly. In terms of its revenue, gross profit, and net income, it has been growing consistently quarter over quarter for the past I don't know how many years. And if we look at its gross margin, it actually has been increasing by a lot. It went from around 20% and now sitting at 27%. Same with its net margin, which started in September 2021 at 9% and is right now above 12%. You love to see this in a growing company like Chipotle. Chipotle actually does leverage their operations in order to improve their growth of the revenues, to open new locations, and to develop new technology. However, they are keeping this under control as their liabilities are below their total assets and their current ratio looks healthy at the current moment. In terms of debt to equity, yes, of course, their debt is higher than their equity at the moment. However, if you can see the trend from June 2022 all the way up to now, they have been increasing equity while debt has not been increasing at the same rate, bringing the debt to equity down to a more acceptable level. In terms of efficiency ratios, this company is beautiful. You can see how stable they are all moving, and they're all going upwards, where the one that we actually like to focus on, which is return on invested capital, is shining at around 18%. When conducting a fundamental analysis, Chipotle easily scored 8 out of 8 ticks for the cash flow compounder metrics. Starting off with the low liability risk, as we spoke about this, they now have an interest coverage ratio of 200 times, meaning that they have extremely low liability risk. Then they have a very solid balance sheet, meaning that they can pay their short-term liabilities with their current assets. Their cash flows are extremely consistent. I have seen very few companies get cash flows so consistent at Chipotle's, and they conduct extensive share buyback programs, which is amazing as it returns a lot of value back to the shareholders. Then they have very impressive pricing power to be a fast food company, because to be a fast food company, when we compare it to McDonald's, Burger King, or other fast food chains such as Subway, their prices are actually above the average. However, since they focus so much on the quality of their products, the health, the ingredients, the service, customers are actually willing to pay a higher price than they would for the other type of companies. So they actually have a pricing power based on their brand. Then they have a stunning organic free cash flow growth, and this is mainly fueled by their organic revenue growth. And adding to all this, they have one of the most perfect existing moats or competitive advantages in the industry, as I cannot imagine wanting a burrito and going somewhere else that is not either Chipotle or Taco Bell. And you usually go to Chipotle more often because it's a lot more healthier and feels better than the Taco Bell after a long day's work. In their growth potential, we're just going to reiterate what they said in their growth strategy because I believe this management knows exactly what they're doing. First of all, the first growth avenue that we usually suggest is the geographical expansion, and this company is already very, very established in the US. However, they only have 66 international locations. So I would suggest geographical expansion by moving outside of the US. I'm sure that they will create more restaurants inside the US. However, I believe the untapped market here for restaurant like Chipotle is actually outside of the US. And the second one is to enhance same restaurant sales. Of course, they did mention this in their growth strategy at the start when we commented on it. So this means that the management knows exactly where to look at and that they're ticking the right boxes. I don't think we will ever catch Chipotle not trading at a hefty premium, but of course it makes absolute sense. If you want to own this company, you will have to pay a higher price than you're willing to pay for other type of companies. But we can say that this is the king of fast food, especially when talking about publicly traded companies. This company right now is trading at a PE ratio of around 65, which is right above average where it has been trading for the past 4 years. However, when we look at the free cash flow yield of 1.55%, when comparing it to the 3% long-term inflation rate, this actually suggests that the company is trading at a big premium. As usually, we like to find companies at an attractive valuation when the free cash flow yield is closer to the long-term inflation rate. Now, for risk and possible challenges, I honestly think that there are no major risks for this company. Chipotle won't be influenced by a worsening competitive landscape due to their competitive advantage and their impressive moat. There will be no possible upcoming regulation changes for the burrito fast food niche. And then in terms of performance and market, I don't think that this is a sector which gets very, very affected by economic downturns or being a cyclical industry, since it's very low priced food. And in terms of an economic downturn, people will cut up on more luxurious, high price dining out experiences rather than cutting out a cheeky Chipotle burrito every once in a while. So before moving on to the investment conclusion, please remember I'm not a financial advisor and this is not financial advice. So please do your own due diligence. However, I do believe that this is one of the best companies in the stock market. It has a strong moat with consistent, predictable, resilient, and growing at a super fast paced cash flows. And they have very high return on capital employed, meaning that they know how to create value for the investor. So in conclusion, I believe that this is an amazing company and it will be a great investment. However, they traded a hefty premium, and after rising 75% in 1 year, I would not feel comfortable in buying it at these levels. However, I will keep it in my watch list, and if you want to be informed if I ever buy it, follow me on the free Patreon. And thank you for watching. As always, this has been the Cashflow Compounder. As I told you, join the free Patreon for extra content, and there is a link in bio for a free stock if you join Trade Republic or Trading 212.